In today's show, I'm going to be sharing with you 3 key metrics, which shows that the bulls are still in control of the Bitcoin price despite 12K resistance. The 12.5 level hasn't been touched now in over 13 months. So currently, analysts are eyeing that $16,000 price target, partially due to a CME futures gap, as well as the expectation that US inflation will rise higher. I'll be breaking this down for you in today's show. We'll also be taking a look at the latest from PlanB, who predicts a $20 million Bitcoin price due to quantitative easing, explosion of the Fed and the European Central Bank's balance sheets to 7 trillion and 6.4 trillion, predicting once again a $20 million Bitcoin price. I'll be breaking this down for you in today's show. We'll also be taking a look at Robert Kiyosaki's most recent tweet, why savers are losers and why gold, silver, and Bitcoin are the biggest winners. Also in today's episode, this DeFi project, Yearn Finance, known as YFI, smashes records, surpassing the Bitcoin price and touching $38,000. That's right. We'll be discussing this particular project and why it's soaring so much, currently trading above $31,000. Also in today's episode, Bitcoin analyst who turned 0.2 Bitcoin into $100,000 unveils his crypto trading strategy. And that's right. He turned roughly $2,000 into over $100,000. I'll be revealing his trading strategy right here in today's show. We'll also be taking a look at the overall crypto market. As we can see, Bitcoin, Ethereum, chainlink, and all the major altcoins in the green. But where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, if interested in tapping into OPM and leveraging other people's money to grow your wealth and crypto portfolio, smash the link right below this video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. I'm gonna be sharing with you 3 key metrics, which shows the bulls are still in control of the Bitcoin price despite 12K resistance. That's right, Bitcoin price dropped as much as 10% this week. And while this might be scary for day traders, the 3-day chart shows the downside move hardly made a dent on the current market structure. Go Bitcoin bulls. This holds especially true when considering that the 12.5 level hasn't been touched now in over 13 months. Currently, analysts are making $16,000 price targets, partially due to a CME futures gap. Also consider there is a CME futures gap just below 10,000 at about the $9,600 to $9,700 range. And also traders are expecting that US inflation will rise higher. That's why so many traders are bullish with all this quantitative easing going on. So as you can see right here on your screen, this chart illustrates how insignificant the past 10 days of negative performance is. From a broader perspective, Bitcoin has racked up a 48% gain year to date, and there is no evidence of weakness. That's right. The largest daily drop over the past 5 months was negative 6.4% on August 2nd. However, hodlers are unfazed by recent volatility, while short-term traders confabulate whether the August 28th CME futures and options expiry caused the dip seen in the past few days. On-chain data reveals that hodlers have become more robust than ever. As you can see right here on this graph, 63% of UTXOs haven't been touched for over a year, something without precedent. These hodlers faced a 53% dip over the 30 days leading into March 13th, but even the Black Thursday crash did not entice them to move their Bitcoin. That's pretty good. That means hodlers are here for the long haul, and it doesn't matter how low Bitcoin price may drop. We're going to be holding until this thing blows up to the moon. Now, options market shows very few signs of stress, another bullish sign for the Bitcoin price. Options markets provides real-time sentiment from large traders and arbitrage trading desks. The 25% delta skew is the primary fear and greed indicator for options markets, as they measure how costly protection from an adverse price swing compared to a positive one. As you can see right here on your screen, these put options, which provide buyers with the opportunity to sell Bitcoin at a fixed price at a later date, are currently 6% more expensive than a similar call option, although the instrument is not as optimistic as the 13% price difference measured earlier this month. A 25% delta skew indicator can still be interpreted as bullish. So there you have it. The next bullish factor for the Bitcoin price is top traders remain net long. Some exchange provides data on top traders' long to short net positioning. This is an excellent way to gauge whether professional traders are leaning bullish or bearish. Now, even though individual futures markets are balanced between buyers, which are longs, and sellers, which are shorts, top traders usually have their risk spread over multiple markets. By aggregating these client positions, exchanges can determine top traders' net exposure, as we can see right here on your screen, showing you Binance futures in the blue and OKEX futures in the red. Now, Binance and OKEX top traders have held a bullish stance since July 27th. By itself, this is an impressive feat, considering the sharp $1,500 Bitcoin price drop we witnessed on August 2nd. The next bullish indicator for the Bitcoin price, fewer liquidations on the futures markets. That's right. By measuring futures contract liquidations during negative price swings, one can estimate how vulnerable the buyers are. One should keep in mind that there has been 9% or more intraday price swings on 4 occasions over the past 3 months, as you can see right here on your screen. Had these traders been caught off guard with 10x or higher leverage, those would have been forcefully liquidated long ago. Therefore, futures open interest would vastly decrease. I also want to stress extreme caution if you're trading with leverage during extremely volatile times like this in the crypto market. Be careful, because it's not hard for your position to be liquidated just like that. And as you can see right here on your screen, total open interest on Bitcoin futures have increased by 166% over the past 5 months to now $4.8 billion. This data provides further evidence that whales aren't getting liquidated by the recent 10% negative move, which is another bullish indicator. Every bull run has occasional corrections. Do keep this in mind. Bitcoin does Bitcoin things, as I like to say. Surely there will be some selling pressure as Bitcoin consolidates after that 28% rally that just occurred over the last 2 weeks of July. Even during the massive 240% 3-month bull run that started early April 2019, there were 4 occasions of 9% or higher short-term corrections. I feel it's healthy. It has to correct, especially when we run up so fast. Nonetheless, both on-chain data and top trader sentiment via derivatives remain bullish. This indicates that the market will tend to move either neutral or upwards over the next couple of weeks. So let me know your thoughts. Do you feel we'll continue trading sideways and ranging, or do you feel we'll break out likely to that $16,000 price target, which many analysts have their eyes on right now? Or do you feel we'll break down below that critical $10,500 support and revisit that $9,700 CME futures gap? Let me know in the comments right down below. And before we check out this $20 million Bitcoin price prediction from the infamous PlanB of the stock to flow model, and check out what the real Robert Kiyosaki has to share regarding why savers are losers and why gold, silver, and Bitcoin will become the biggest winners. First, let's take a look at the overall crypto market. As you can see, Bitcoin up 1.3%, maintaining just above that $11,500 support. I'd love to see the Bitcoin price break out above that $12,000 resistance, flip it into support, and then move onwards and upwards. We have Ethereum up 2.4%, trading at $407. Chainlink up a whopping 10%. Let me know if you're bullish on the missing link of the blockchain, currently trading at $17.25. XEM is up 19%, trading at 14 cents. Miss Litecoin up 5%, trading at $60. XRP up 1.7%, trading just above 27 cents. And BNB up 0.3%, trading at $23. And now checking out some of the top exchange volume, we have Binance up almost 13% with 6.1 billion in volume. OKEX up almost 42% with about 3.4 billion in volume. And Hobby Global up 16% with 2 billion in volume in the past 24 hours. All right, now let's check out this tweet from PlanB of the infamous stock to flow model, who recently tweeted, modeling Bitcoin price with central bank balance sheets. We're talking about the Fed and European central banks. 90% R2, recent quantitative easing fueled explosion of the Fed and the European central bank's balance sheets to 7 trillion and 6.4 trillion, implies a Bitcoin price of $20 million. And if you're not familiar with the infamous stock to flow model, it predicts a $100,000 Bitcoin price for the first time on August 16th, 2021, and it goes on to predict a $288,000 Bitcoin price medium average between the years 2020 and 2024. So this is his most recent price prediction, talking about with all this quantitative easing, all this money printing going on in the world, that the Bitcoin price is likely to climb to $20 million. Let me know if you agree or disagree with PlanB, and checking out some of the responses to this tweet. So wait, What does the Bitcoin price number say when US goes full Japan and the balance sheet is 100% or more GDP? PlanB responded, I think that after Powell's speech yesterday, they rather intend to go full Zimbabwe. And that's right, Jerome Powell said they're going to continue printing and printing and printing. That's the name of the game. And as they continue to do so, what do you think is going to happen to safe haven assets such as Bitcoin? Go figure. All I know is this: Bitcoin is superior to gold as a safe haven asset. Tyler and Cameron Winklevoss actually broke this down in their recent report where they made the case for a $500,000 Bitcoin, comparing Bitcoin and gold side by side. Here's the major difference: the supply cap. What is the supply cap of gold? Nobody knows because it's a mystery. We actually have to trust a third party, in which with Bitcoin, there could only ever be 21 million supply, in which millions have been lost forever, and they can't print more. They can't find more in the vast oceans of the earth. They can't mine asteroids for Bitcoin. It is what it is. So Bitcoin is the hardest form of sound money and the most scarce asset on this planet, minus other cryptos such as YFI, which only has a market supply of 30,000. And now checking out this recent tweet from Robert Kiyosaki. Check this out: why savers are losers. Fed announces interest rates to be kept low for at least 5 years as the Fed prints trillions in fake money. Tesla and Apple split stocks 4-1, printing fake stocks. Savers of fake money and fake stocks feel richer till crash. Then gold, silver, Bitcoin, biggest winners. Touche. If you agree with Robert Kiyosaki, let me know in the comments right down below. All right, now let's break down our next story of the day. This DeFi project, Yearn Finance, has been booming to say the least, smashing records, eclipsing the all-time high Bitcoin price, and touching that $38,000 price point, currently trading above $30,000. As you can see right here, this is live, and look how sexy this graph is looking. Let's break it down why this particular coin is surging right now. Last week, YFI made headlines for outpacing Bitcoin by price per coin as the YFI token value spiked to $16,000 on August 20th. Now on Friday, YFI was averaging around $17,000 to $18,000 per coin, and the value leaped even higher during Saturday afternoon's trading sessions. According to market data, YFI touched an all-time high of over $30,000, actually now over $38,000 just last night, and presently the value is hovering just above $30,000. Now this week, an individual on Twitter asked the Yearn Finance founder why he was talking with the FTX exchange CEO, Sam Bankman-Fried, and Andre Cronje did not detail what Yearn Finance and FTX were collaborating on, but he did confirm that some kind of partnership was in place. Taking a look at this tweet right here. What'd you say to building together, Andre Cronje? And he responded, this is the creator of Yearn Finance. Guess the cat is out of the bag, just so that there is some expectation management. This is a long roadmap that we're working on, so it won't be anything anytime soon, but there will be something very sexy in the future. So there you have it, coming directly from the founder of YFI. In addition to the FTX topic, the DeFi token YFI was also recently listed on the lending platform Aave this week. I believe this is why it has been surging out of control. Aave has also been making headlines in recent days for its total value locked and the project's electronic money license granted by the UK's Financial Conduct Authority. Yearn Finance has also revealed a new insurance primitive this week called Yinsure Finance. So there you have it. The Yearn development team published an article about the Yinsure Finance subject, which states, we will systematically be releasing Yinsure Finance, a prototype for a new kind of tokenized insurance. So let me know if you're bullish on YFI. Do you feel that this particular crypto is likely to keep pumping potentially to $100,000? Which coin do you feel will reach 6 digits first? Bitcoin, YFI, or some coin we've never heard of? Also, do you feel that this will likely crash, or do you feel it will continue booming? I'd love to know your thoughts in the comments right down below. All right, and before I break down our next story of the day, Bitcoin analyst who turned 0.2 BTC into $100,000 unveils his crypto trading strategy. First, let's take a look at the overall crypto market cap, sitting at $367 billion with $88 billion in volume in the past 24 hours, and the current Bitcoin dominance is 58.3%. But consider if we exclude ICOs as well as stablecoins, then the realized market cap cap, which is the true Bitcoin dominance, is closer to 80%. And now taking a look at the top gainers within the top 100 in the past 24 hours, DFI.money up a whopping 175%, trading above $4,800. But all I could say is this: DeFi is booming and will continue to boom like a mofo. Ample Fourth up 69%, trading at $1.48. Yearn Finance up 61%, trading above $31,000. NXM up 31%, trading at 62 bucks. Neem up 28%, trading at 14 cents. And Thorchain up 26%, trading at $1.10. Below that, we had BZX Protocol up 26% and Balancer up 24%. And now taking a look at the biggest losers within the top 100. Flexicoin down 25%, trading at 0.006. Kusama down 6%, trading at 34 bucks. Sia Coin down 4%, trading at 0.004. Storj down about 4%, trading at 65 cents. CeeLo down 3%, trading just below 4 bucks. And Numeraire down 3%, trading just above $51. Below that, we have Holo down 3% and Icon down 2%. Now, out of this list of the biggest gainers and losers, which altcoins in particular are you most bullish on? Which ones are you watching you feel has the most potential? Drop me a comment right down below. And now checking out the BitMEX margins, we can see the bulls are back in control, leading with 21 million in superiority, with longs leading 51.2% versus 48.7% shorts. Are you currently bullish or bearish on the king of all crypto? Let me know in the comments right down below. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 75 in greed. Yesterday was a 79, last week a 76 in extreme greed, and last month was a 75 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a buying opportunity, aka BTFD, buy the frickin' dip. And when investors are getting too greedy, that means the market is due for a correction, which in my opinion is exactly what we're witnessing right now, a healthy correction. All right, and before I break down our final story of the day and reveal a crypto trading strategy this analyst used to turn 0.2 Bitcoin into $100,000, first I want to encourage you to smash the show more button right below this video in the description for a detailed analysis of what's going on in the market. This goes for all 500 plus videos right here on my channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every single day, it also allows you to download the latest episode of the show in MP3 format. Also, be sure to smash that subscribe button right below this video in the description, or visit the direct link at cryptonewsalerts.net. You can also find us on all the major podcasting platforms, in which I'm happy to announce we just crossed 100,000 podcast downloads. So I want to say I greatly appreciate your support. You can find us on Apple's iTunes, Spotify, Google Play, as well as Stitcher Radio. You can also follow me on Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, as I am, I do have a private crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs just like yourself from all over the world. To become a part of it, simply click this link, request to join, and I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a crypto Telegram chat. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day, shall we? A closely followed Bitcoin trader is unveiling his winning crypto trading strategy that allowed him to grow from 0.2 BTC into $100,000. If you like that ROI, let me know in the comments below. In a new Venture Coinist episode with Luke Martin, the pseudo-anonymous trader, Salsa Tequila offers his insights on how to manage risks. Here's what he went on to share. I think of the market in terms of a constant dynamism, in the sense that whenever I enter a trade, my expectancy changes. Let's say I enter at 11,800, a long position, and I'm targeting 12K, and my stop loss is 11,700. My risk reward ratio is 2 to 1. As the market moves, my risk reward ratio also changes. Let's say we're at 11,900. Suddenly, I'm risking 200 to make 100. So I always evaluate my positions whenever I'm in one. Salsa Tequila, known as one of the most transparent traders in the crypto community, is at the top of the leaderboard in Bybit's World Series of trading, as you can see right here on your screen. Pretty cool, right? As a day trader, Salsa Tequila says his edge comes from scalping, which is a trading technique that leverages volatility in the lower time frames. As he shares right here, the longer you're in a trade, the more outside factors can affect it. If you're in a trade for days, you can give the market a lot more time for such news that affect the market to change conditions. The more time you're in a trade, the more risk you have of outside factors affecting your trade. And that's a fact. The crypto strategist also points out that as a day trader, he consistently monitors the market. I use different tools. The news. I try to have a decent news feed. I use not only Japanese candlestick charts, but I also watch a bit of the order books. I watch on-chain analysis, the news, certain market statistics that I have. The trader notes that he uses all of the data to evaluate whether he should take a certain trade and how he should manage it. In addition, Salsa Tequila emphasizes a few key strategies when trading on leverage. When you're leverage trading, you need to use a stop loss. You need to have an invalidation plan, and you need to keep your risk very tight. So there you have it. When trading with leverage, be sure to be using a stop loss. And for those looking for a trade for a living, Salsa Tequila explains why he does not recommend trading money that you don't have. Very good advice, FYI. If you don't have spare money to trade from and to live off, you have a way lesser edge in a sense that if you're pressured to make money and you need to make money trading to live, you're going to have a lot of pressure on your shoulder and you might take some trades. And I agree 100%. Only risk what you can afford to lose, because trading, especially with cryptocurrency, is extremely risky. Well, that's going to include today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, if interested in tapping into OPM and leveraging other people's money to grow your wealth and crypto portfolio, smash the link right below this video in the description and register for this free system entitled OPM Wealth. You'll be glad you did, and I look forward to connecting with you on tomorrow's episode. Peace.